Hey everybody, it's Jason. Keep it here for your latest real estate market update. So as you know, home prices have continued to go up and they're still going up for the month of March in 2021. Why is that? Well, the inventory is still low, and that's the number one reason that prices have been incredibly high for the past couple years, especially the last year. Now, Realtor.com shows us that month over month, this month that just passed, March, increased by 50%, prices increased by 50% when compared to last year. And that's huge. Not only is that big, but that's bigger than February compared to last year, which went up last month was 48% when compared to the year before. This is incredible considering that last year had incredibly high home prices as well. So what's going on here? Interest rates have been low for a long time. That means that people have a low monthly payment when they make payments on their home. So people can qualify for a bigger and a better priced house. Does that make sense? So interest rates have been low for a while. That's helped buyers, and people can afford a higher home with a higher sticker price. Now, even though a home looks like it's a really high price, like $900,000, $1 million, $700,000, people are actually making lower payments than you would think because those interest rates have been low. They're getting more value for their money when they borrow from the bank. That's one of the reasons that prices have been high, aside from the low inventory. Now, those interest rates are already low, and in comes the outbreak. In comes the outbreak, and people are not allowed to really leave their homes very much. People, even if they were allowed to, don't feel comfortable leaving their homes. And also, we're not allowed to do open houses. So a lot of people are not comfortable with selling their homes. We're not even, as realtors, allowed to show homes. We could do, later on, they find out that we could do one-to-one appointments, and that's safe, so good. However, you're not going to have as much movement when usually you have a big open house with many people coming in all at once versus one-to-one appointments. So it discourages people from showing their home because it's more of a hassle. And just physically, we can't put as many homes on the market, and we can't get as many buyers in rapidly to see the home. So that also decreases the availability of homes. There's another thing that was going on, and it's called forbearances. I talked about it a little bit in my last video. Forbearances are an agreement that people have had with their banks. Hey, we're having a tough time due to the outbreak, what that has caused, and also how that has hurt the economy. Let's hold off from paying our mortgage. And the bank says, fine, you do not have to make mortgage payments for 1 year, 12 months. So even if somebody was going to be foreclosed because they were having difficulty making their payments, even if somebody was going to say, hey, my home is worth a lot and I'm having difficulty making these payments, why don't I sell it? It's called a short sale, when I don't really profit, or I profit just a little bit and I sell the home, not because I want to, not because I'm going to move up to a fabulous 2-story mansion, not because I'm moving on to bigger and better things, but it still makes sense. I'm going to sell it because I need to, and then move on to the next stage in my life. Now, there were a lot of people who already were in a bad financial situation. We happened to just catch them in that moment, and they went into forbearances. So of course, they're not making any payments, but they keep their house. They're going to stay with that. And then also there were people who were hit really hard with a bad financial situation, and once they come out of this forbearance, most likely will need to sell their home. And we're not seeing that happen because forbearances are still going on. Now, the first wave of forbearances, the first people about 12 months ago, their forbearances were going to be due at the end of March, beginning of April. However, like I anticipated, these 12 months forbearances got pushed back to a total of 18 months. So those people who said, I don't want to pay I agree with the bank, we're not going to pay our mortgage for 12 months, fine. They kicked the can further down the road, 6 more months to 18 months. Now, is that a good thing or a bad thing? I don't know. But if you're in that situation and it's hard for you to make those payments, it's good for you because you could buy some time to figure out what you need to do to make those payments, or figure out, okay, my home value is very high, I'll still sell it. So in other words, you guys, these forbearances are keeping a lot of people from selling their homes who otherwise would need to sell their home given the current economic status that's going on. They would need to sell their home to either call off the debt for their home or make a little bit of money and then move on to something else. Now, a few things are expected to happen. Like I said, they extended those forbearances, so we don't know when, possibly another 6 months from now. And will they continue to kick the can down the road again and extend those again? I don't know. But when those forbearances are due, we'll see at least a few homes come back on the market because people need to start paying their mortgage. The other thing that could help soften home prices, and I talked about this a little bit in my last video, is that interest rates went up just a little bit. So in January, they were super low, like 2.7%. That was a really good time to refinance with the bank and renegotiate your loan so you have lower monthly payments if you bought a home even a long time ago at a higher interest rate, like at a 4.5. So they're still at a good rate. And currently, let me take a look real quick with the current interest rate. It's about 3.39%, and that's still really good. However, it's much higher in a short period of time compared to January. So if this trend continues, interest rates continue, it may flatten out and kind of soften home prices. As for now, as this video is made in the beginning of April 2021, home prices are still incredibly high, and in California and on the West Coast, homes are flying off the shelves. They're selling in less than 20 days, which is really good for sellers, and it's a sign of a strong market that people want to buy a lot of homes. It also makes it complicated for buyers. They need to compete against each other, and sometimes they outbid each other, keep giving higher and higher prices until the home sells for over asking price. And what we're seeing in our local market, West Los Angeles, Mar Vista, Culver City, and I'm sure a lot of you guys throughout the country, and especially the western region of the United States, homes are selling for above their asking price. So you guys, let us know what's going to happen. Are we going to see an increase in inventory, especially when those forbearances are finally due 6 months from now? Or will interest rates stay low? Will inventory stay low and home prices continue to go up? Few things can happen here. Nobody really knows for sure. Give us your feedback down below. I'm Jason. Let me know if you have any real estate questions. And if any of you guys are dealing with these forbearances, it could get a little confusing. Go ahead and DM me at JF Real Estate Agent. And you can also text me at 310-256-3209. Go ahead and give a like and subscribe. I'd appreciate that very much. Thank you guys. See you next week, and keep it here for the latest mortgage rates and housing market updates.